Okay, Pankaj Murarka, I'll come to you. One of the things, the government has accepted the key recommendations of the 16 Finance Commission in full. The vertical devolution retained at 41%. Some bit for infra. Is this enough? Was this good? Is there more needed?
No, I think government has done the right things, and on top of that, the central government is providing 1.47 lakh crores of assistance to us. So, if you add to that aggregate, I think that's sufficient funds available to state governments to continue accelerating the infra projects. I think there is meaning. I would say this budget is short on rhetoric and long on details. There are a lot of finer details, so which effectively means the focus has been on unlocking, policy handicaps, improving ease of business, providing policy impetus to drive growth. And I think it's clearly provided a lot of impetus for credit markets and bond markets. Meaning in terms of what it has done, talking about introducing total return swaps on corporate bond. India does not have a corporate bond market. There is no mechanism for lenders in India to pass on the credit risk or share the credit risk, which is the most important thing in all credit markets in the world. In the banking sector, and we don't have a functional bond market. So what you're doing with TRS in terms of unlocking or starting at least giving a fillip to the corporate bond market, the government will have to step in and do the underwriting. They will have to create the market. They will have to become the market maker before the market comes in. Providing 100 crores of incentive for muni bond markets globally and in US is of trillions of dollars.
Okay.
It doesn't exist here.
Mr. Bond, are you as optimistic on this?
No, I think TRS is a good news. Of course, details are awaited. RBI can tamper it very easily. CDS never flew, essentially because when you bought protection, you had to necessarily buy, 100% cash had to be allocated. There has to be some leverage built in there. So look, I own a Shriram Transport bond, and you as an individual, I'm a Citibank, and you as an individual want to buy it, you can just put $20 and then carry a risk of Shriram Transport 100%. If that is what effectively comes out with the support of RBI, big news. Okay. If it's going to be like $100 you have to give me to own a Shriram Transport, then you might as well keep Shriram Transport, right? Bond in your book. So these details are awaited. It's very likely that, like CDS also we got excited, but eventually it never took off. But I think they understand that bond market, as Pankaj said, needs support. I think it will be in the form that he and I think. That just a little bit of a leverage will be built in. See, equity, as I said, equity has done well. India has actually created a lot of pipes to get a lot of money into equity. What we need is a lot of pipes for private equity, for venture capital, for private debt, for corporate bond market. Those ought to be created now. And I think to a certain extent,
I could just make a comment. I think
of course.
My assessment of this budget is the finance minister is long on bond market and short on equities.
Short on equities. Okay, some details coming in. We were talking about the capital outlay for defense. It's at 2.2 lakh crore rupees versus 1.8 lakh crore rupees for FY26. That's a jump of 22%.
That's a good number.
So, like we said, now when we get some of the details, there will be clarity on what has been kept in the speech and kept out, because obviously even at 1.5 hours, there's still a lot more to say. Just want to pull up some of those defense stocks and see if there's any movement there at all or some recovery there at all. So there has been some extent of defense outlay. On the other hand, the GST revenue that they are pegging in also seems to have improved. So on balance, once that bruising, Nilesh, I'm going to come to you for this. So once that bruising of STT kind of, and not just on futures and options, also they have increased STT. Once that bruising sort of eases, do you think that there's enough for the equity markets right now to feel this was not half bad?
Yes, post this, whatever, the kind of bruise that we see today, I think post that it's going to be business as usual. I think after that we again go back to some of the global headwinds and things of that kind, and back to whether FPIs continue to sell or not. I think those are some of the things that we were probably focusing on maybe a day or 2 days earlier. I think we're back to that. And apart from that, of course, getting on to basically the micro fundamentals. I think that's something which will probably now start to prevail.
Okay, very interesting. By the way, data centers have gotten a small push. There are not too many plays to play that, but I did see an Anantraj zoom up in trade, so watch out for that. I don't know if the rare earth corridor creation really results in some meaningful gains for some of the rare earth plays, and some proposals to restructure power finance companies, and therefore maybe that bucket or that cohort could be an interesting one too. Mr. Ekambaram, you were waiting for long-term capital gains, not on the FPI side, but otherwise, it's come in one space, not in general. Is that a disappointment or is that start?
So it's like this. I think there was too much of a build-up of expectation because the FPIs had withdrawn from the market on long-term capital gains, and I think there was a lot of lobbying as well. But I think I had always said that it should be on long-term capital and not short-term.
Exactly, yeah. It's
so
come
the
for
tax
data centers,
holiday, the tax holiday on export of cloud services from Indian data centers, if they had expanded it to a number of key services, right, or even manufacturing exports from India or building India, it would have helped more from attracting long-term capital. But there is something small, and that's the way I see it. So, you know, as it was just said, Tamanna just said, the devil is in the details. Probably there has been an addition and a subtraction. Markets have taken it badly because STT, you know, the darling FNO is sort of hurt a little bit. It'll probably bounce back. But, you know, it's back to fundamentals. And there is a little bit for everything. If you look at it, something for employment, something for skilling, something for SME. The capex outlay has actually increased, right? So there is a lot of small things happening, but no big bang. And I think we went into it assuming no big bang. There's a little bit for everybody. So.
By the way, there's a number there. The STT collections are tracking at about 50,000 crores in FY26 versus the budgeted number of 78,000 crores. Material shortfall, I don't know if it gets filled because of this hike in tax, but you know, that is something, I don't know if that engineered in any fashion, this hike. But you know, I agree with you. I think it's not got to do with filling up the coffers as much as discouraging retail.
But I'll tell you, it's a timing. You have to get a vaccine, a flu shot every year. You never get it if you're already unwell. Because
who said?
That's the way I would put it. You already have thoda sa bukhar and all. Your doctor will say, come back for your flu shot later. Yes, you need it, but abhi nahi.
Short equities pe, long bonds pe.
Equities. That's the line, I think, of the day. For individual sectors, let's come to individual sectors now, because you're seeing some respond. You're seeing some textile stocks respond okay. You have your AI play, whatever to whatever extent we have, a Netweb Tech, etc. Zenzar doing okay, and Amber Enterprise doing okay on some of those PLI, ECMS schemes. Is there more scope there, Pankaj, from where these stocks have already run up? Because you already have a directional push from government on this whole self-reliant theme.
Yeah, so the PLI outlay has been increased from 20,000 crore to 40,000 crore this year. So I think PLI is now part of core, and given the fact that we are at a stage where we face external headwinds, it's very important to double down on our domestic manufacturing and domestic demand. PLI just does that. Probably I would have expected, given a choice, of probably a more ambitious allocation, because we really need to drive it on a... we are at a stage where we need to not take incremental steps, but on some of those some big ideas. We need to pick few big ideas and really leapfrog on them.
They are saying let's not do in the budget, Pankaj. Budget baar karenge.
Happy. They've done some of those things. I'm
exactly.
not. We're looking forward to banking reforms. Now she's announced a high-level committee on bank reforms. The government has already given a draft paper on the NEP. The biggest reform sector crying for reforms in India is electricity reforms. Yeah. It's become a political subject. You go through state elections, those SEBs are in a bad state. It's a sector which needs massive investment, and where we are at a stage where the whole energy industry is going through a huge technological transformation in terms of what's happening, right? So that's a sector which needs the biggest reforms. But yes, that's outside the budget, but we are doing that. So I think it's time for India to do, given the fact I said, probably when I look at India's picture, I step back and look at the big picture. The most comforting thing for me is India's macroeconomic stability. It's a very hard-earned macroeconomic stability over the last 10 years. Now in an environment where globally the world is challenged, we need to really capitalize on our macroeconomic stability and double down or really leapfrog on some big ideas.
Most certainly.
I agree with you that not all of that has to happen in the budget, but I see a big picture government thinking there, and which is what makes me optimistic on outlook for the economy and markets going forward.
The other thing, Mihir, from a markets perspective, if there was a debate whether the budget will look at consumption versus capex, I think there is an answer right there. There is no big impetus given to consumption at the very least, from whatever little I make of it. I don't know how you think about it. But therefore, if the market was looking at pivoting towards consumption stocks, not looking at capex stocks, is there a rethink now out there?
No, absolutely. So that's what we were discussing before the budget, that, you know, the focus on capex should continue, and thankfully it has continued. And on PLI, my view is that I think in the government's mind it's an open-ended approach, in the sense if they see a potential, in any particular sector, they are more than willing to go out and introduce special PLIs for that particular segment, etc. So I don't think we need to worry too much about the actual allocation to PLI. In my mind, the government is treating it like an open-ended thing. And the best thing about the budget this time was there was not much to be done in any case. Your income tax cuts were done last year. Your GST cuts were done last year. The sin tax on tobacco was done last year. So there was not much to be done in any case. So I think as long as there is nothing negative, it should be business as usual.
Okay, some details coming in, and you'll have to cut corners somewhere. So the PLI for mobile and IT hardware, for example, versus a 9,000 crores is now 1,527 crores. From the data that we have. So a huge drop there. So this PLI that is coming in some segments is coming obviously at the cost of others. You have, of course, some more of that fine print coming in as we speak, and we will be focusing on those as well. My question now is, and Mihir, I'll come to you, as someone who manages money and I would say aspirations of investors right now. And the stock markets in that sense are also aspirational for income, to double up your income, or at least to give you some support apart from anything else that you do. What is the outlook looking like when the focus is on, okay, go slow on F&O? Is that an impetus to cash markets? Is that now going to be another tough set of period for the next few months?
I don't think, this STT and all that, LTCG, they are all irritants in the short term, but if the market does well, which does well when the economy is doing well, then all is forgiven, right? So it's more important to get the economy back on track in terms of the EPS growth for corporates, stimulating the relevant parts of it, get the FII money in, stabilize the rupee, and hopefully seal the US trade deal. I think those are the bigger factors that are going to be driving the market rather than the STT, etc.
Got it. Now, just before I come to Nilesh and Shanti ma'am, Manish, there's a lot of chatter and a lot of confusion. So just want you to explain this, right? 16 lakh crore was the estimated gross borrowing. It has come in at 17.2. The number last year was 14.8. 14.8. So is this net? Yeah. So is this a worry, 17.2?
Very.
It is a worry.
Market, basically market does not experience net borrowing. It experiences gross borrowing, right? And that number is very high, especially in the context that market is actually super worried of the very high duration being supplied. And which is why, despite RBI cutting rates, actually the bond yields have risen.
Right.
And to the extent if the number is going to be 1 lakh crore more, it's going to irritate markets. And so there better be some clarity in terms of a composition of it. Maybe the T-bills are higher than this. So that we need to see.
What will assuage the market?
If the dated borrowing is not very high and the T-bills are relatively higher, or there is a bond swap there involved. So that we'll see. We will get to know in 10 minutes time.
Okay, fine. Nilesh, you want to come in on that? And part two then, therefore, you mentioned business as usual, right? But if this is indeed not an equity budget but a bond budget, right? What is it that you will seek in terms of clarity, just so that the yields don't really go hyper from where they are right now already?
No, I think ultimately what's going to matter is transmission. I mean, the rate cuts which have happened, or all these measures which are essentially done to bolster the bond market, finally should lead to lower cost of capital. If there's a lower cost of capital, that itself will be hugely positive for the economy, for businesses, and for consumers. So that's really what I would want to look for. That is there rate transmission finally happening? Is the cost of capital coming down or not?
Okay, so now company reactions coming in. Rajinder Gupta, Emeritus Chairman of Trident Group, with us on the phone line. Mr. Gupta, can you hear me, sir?
Yeah, yes, please carry on.
Okay, what do you think has been done for the textile sector, and has enough been done? Because especially export-oriented companies have been suffering because of tariffs. Were you hoping for more, or do you think that there is some support that has come in the budget?
Well, I think first of all, it's a well-articulated budget for working on the 2-tier, 3-tier cities, and maybe it is just the rationalization or bringing efficiencies to working of the government. But on textiles, maybe they could have been done better. You will appreciate the amount of tariff hit by the industries, but I don't know what Indian government could have done. I'm cautious about that, especially for the textile industry. May not see a very quick gain in a very near future, but gradually, if something happens on this mega park or something happens on alternative fabric or something works on alternative marketing, could have been done better. I still believe something for promoting the Indian branded cotton, like what they did in cashew nuts and other areas, had they also made some special incentive or some how to be make special Indian cotton or qualitative or branded Indian cotton, could have also helped in terms of promoting or adding value to this system.
Mr. Gupta, so you would have hoped for more. Is the current state of business because of the pending India-US FTA, but some of the other deals signed, looking up, or is there a case of worry right now? And would you have therefore hoped for the budget to address that?
I will not say the case of worry. It's a case of, well, there is a challenge, and one has to now get the opportunities available with the FTA opening up with the Europe and UK and other countries. Those are opportunities, but there's a time lag for 6 months to 1 year for the same, and one has to get prepared. But yes, there is an immediate impact, and I will call is it challenging, not worrisome.
Mr. Gupta, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.